What if now, during the depths of this bear market, is when they finally make their big move against cryptocurrencies? Well, it seems like US regulators are indeed increasing the pressure on cryptocurrencies with a whole bunch of new announcements coming in just the last week that do not look good for the cryptocurrency industry. All of which, of course, also helps pave the way for CBDCs, the Orwellian nightmare of your financial future. We'll be talking about that in today's video. My name's Lark. I make videos on investing. If you like that topic, then please make sure to subscribe to the channel. Leave a thumbs up if you do like this kind of content. Now let's go ahead and get into this. A lot has happened in the last week on the regulatory front. So let's start off with the criminal SEC. There has been so much to unpack from this group of Wall Street insiders. You know, it's so funny. They claim they want to protect regular investors. But the one thing that would actually protect regular investors in the cryptocurrency industry is providing regulatory clarity. And they won't do it because they don't want to do it. Anyway, Gary from Goldman Sachs, the SEC chair, has said that all proof-of-stake networks could be considered an investment contract, a comment that was well-timed a day after the Ethereum merge. Now, if that becomes the thing, if that moves forward, then every proof-of-stake coin will be considered an unregistered security, and we could see mass delistings all across US markets from major exchanges of all proof-of-stake coins. Ethereum, Cardano, Solana, Avalanche, the whole works. It would devastate the crypto industry. And of course, they're not investment contracts. The SEC knows they're not investment contracts, but their mission is to crush crypto and protect Wall Street and the Federal Reserve. Not you. This along with the fact that Gary keeps saying that most crypto assets are securities. He said of the nearly 10,000 tokens, most should be considered securities. Or to put it another way, the vast majority of cryptocurrency coins that are currently operating are doing so illegally. If that becomes precedent, if that becomes a reality, then say good night, because this will be a deep and dark winter for crypto, the likes of which we have never seen. This would be the regulatory crackdown of crackdowns. Now, the SEC has also issued new guidance on banks storing cryptocurrency assets, in particular that they must treat crypto held as a liability, which is dumb, and it would force banks to hold cash to cover those liabilities, making crypto custody completely unprofitable for banks, which is a sneaky backdoor to kill adoption that was happening by the banking sector. And dozens of US banks have already started offering cryptocurrency custody services. Major step backwards, totally dumb move. Then we have this pile of crap from the White House last week, which again puts proof of work mining in the spotlight with talk of setting environmental standards for the industry, which, by the way, is already 60% green. Oh, did you catch this last week as well from Greenpeace, that Greenpeace is spending $1 million of donor money to attack Bitcoin? There's 1,000 other industries that are much, much bigger climate criminals, but none of those end up providing financial freedom. So of course Greenpeace has to attack it. Clown move, Greenpeace, clown move. They're also talking, of course, at the White House about protecting investors from volatility, because Netflix stocks are not volatile. You don't need to be protected from that, because that's okay if that's volatile, because guess what? Wall Street, they got into the IPO. They get to dump it on retail. It's not all bad, though. To be fair, there's a huge amount of scammy and shady BS that does happen in crypto, and if they actually bring in more consumer protections in a common sense way, then it may not actually be such a bad thing. But then again, if the SEC is the one doing that, then the results won't be good, because look what they're talking about. Well, proof of work mining, bad, we gotta get rid of it. Proof of stake, security, gotta get rid of it. Nothing's left. What these new guidelines really laid out was the path to CBDCs via the Fed Now clearinghouse system and the coming launch of a new digital dollar, the central bank digital currency of the Federal Reserve. Now, before we get into talking about this nightmare alternative to free and open systems, let me just break the flow real quick to let you know about Wealth Mastery. This is a twice weekly cryptocurrency investor report that my team and I write and deliver it to your inbox, and every issue is jam-packed full of value and for ways for you to make money in the cryptocurrency markets. Please sign up for free using the link down below in the description. Now let's talk about these CBDCs. This may be one of the most dangerous financial tools coming out, well, in our lifetime, and certainly this decade, because CBDCs are scary, powerful, fully digital money with evil levels of programmability. It will be sold as a tool for financial inclusion, but the switches for control are very obvious if you're paying attention. Here are some examples. You're trying to book a flight, you want to go somewhere warm on holiday? Sorry, you've exceeded your monthly carbon quota. Your transaction will not be processed. Want to buy a bottle of wine? You know, the system read your social media and you've been doing a little bit of wrongthink over there. You said some things that we don't like, maybe some misinformation or whatever. Your alcohol privileges are now suspended for 30 days. Transaction failed. Maybe the money in your account, you have to spend it or it's going to expire in 30 days, forcing you to spend, not save. All of that and more is possible with CBDCs. That's just scratching the surface. Now some say, Lark, come on, man, that's conspiracy nonsense, get off of it. China is already doing exactly that. That's a Chinese social credit system. And just look at the last 3 years of all the insanity as a result of COVID and ask yourself, do you really think that once they have the power to do this, they're not going to do it? Of course they are. These people don't like you. They hate freedom. The only distant hope is that pro-crypto US regulators actually do something to fight back against the SEC and the White House. But the threat is persistent, and we have been discussing the slow creep of regulatory overreach for a long time on this channel. There's been multiple attempts already to stifle the crypto industry. Those attempts have largely been thwarted. And while it'll be easy to say that if all this stuff passes, it's the end of crypto, it's not and it won't be. In the long run, regulations, no matter how badly designed and how ill-intended, will bring in that institutional money. BlackRock will come in and buy up huge amounts of Bitcoin. The number will go up. We may lose our freedom in the process, which is not a great trade. It could be a bumpy ride between now and whenever all that stuff happens, with the global depression seeming more and more likely and regulators pushing to end the Wild West days of crypto once and for all. Could be a bit crazy, guys. Now, if all the stuff outlined in this video happens, there's no sugarcoating it. It's a massive setback to the cryptocurrency industry. It will no doubt pave the way for those Orwellian CBDC systems to come into play. It will truly be a brave new world if that happens. Anyway, let me know what you think about all this madness down below in the comment section. Is it all an attack on crypto, or maybe to make regulations are actually going to make everything better? The SEC is actually on our side, even if it doesn't seem like it. Let me know your thoughts in the comment section. Thanks so much for watching today's video, and peace out till next time.